Futures and forex trading contains substantial risk and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please take a moment to review the full disclaimer. Hello everybody, this is Kevin from chartspots.com. What I want to do today is give you a look on how you can use the volume profile that you can find in most of the trading platforms out there to your advantage. And what I want to show you here is some examples on the crude oil. As you can see here, the July contract. Basically, this blue line is the one you should be looking at. As you can see, price bounced here, tested it again, and then went straight up. Now, how did I find this line? I drew this before price arrived here, so I will show you how you can do it yourself. What I typically do is I go to the hourly candles. Just 1 second to load it, and you can see this is the volume profile of this past few hours of trading. So what this basically means, in case you haven't seen this indicator before, it basically gives you on this price level, so for example 47.90, there were this amount of contracts traded, so you can see around 12,000 contracts, which is different from the volume levels here below, which basically gives it on your time axis. This gives it on your price axis. In fact, this one is a lot more important because it can give you important clues as to where the price might go for a test, or where it might bounce as well, where it might find support and resistance basically. So if you notice this blue line, I will zoom in. You see you have a lot of volume that has accumulated here. The blue line, I drew it just where the volume starts dropping off. Now, what does this mean? On these price levels in these past few hours, there has been little volume accumulated. You saw here a surge of the price, basically going through that level, never coming down to test it again. What this means is there are of course many people or many trades or orders that might be in the order book that did not get filled. Now this is what gives you a support level basically, because when the price eventually retraces a bit, typically it will retrace like 50% if you're in a confirmed uptrend. Now, by all means and purposes, crude oil is not in a confirmed uptrend, as you can see a bit longer term here. We're still in a surge down, but we're seeing some signs that might be a recovery coming, but this might be a blip on the radar and we might go down again. So, but this can be used for short-term trading. So zooming in a bit, I placed this blue line basically where this volume starts dropping off. Now if we then go back to the 1 minute time frame, you will see it came down to the level, hovered around it a bit. Typically I like to see it bounce immediately like it did here, because if it starts accumulating volume, it might mean you go down, while if you bounce, prices, the market is really rejecting that price level, and you see what happens when you actually reject from it. To the contrary, when you spend some time on it, you might go up, you might go down, but as you can see here, we tested it again to make sure indeed are we having enough buyers here. and we flew off to the sky. So that's for the crude oil contract. I saw an interesting occurrence today as well on the E-S&P mini, which is the June contract. If we, I will zoom out just a little bit to show you what happened. So these lines, I actually already put them on the graph yesterday, and you see what it did here. So here it didn't provide support. You can go look a bit back. So it found support a few times, but had trouble going higher. At the end of the trading session yesterday, we broke down all the way down to the next support level, which I drew. So it's the blue line. So you can see I set price alerts to notify me when we reach or close to the level, so I can initiate an order to take advantage of this. So zooming out a little bit to show you again how these levels were drawn. Okay, it's loaded. So we're looking at the hourly chart as well. I don't have the full volume profile loaded. This is a bit of a hassle with the platform I'm using. It's not always loading everything. It basically has to do how much you're zoomed out when you enter the chart on that time frame. Maybe I can try to get it so you can see. Okay, this is better. So when I zoom in now, here this line you can see I drew it where volume starts dropping off. Likewise, a bit, you could even put it a bit lower and it would still be a great signal. On the other hand, I also put it in this trough here, and as you can see, we basically came down, bounced off that level, went all the way up to the next level and came down again. So if you're into short-term trading, you can actually use this to your advantage. If you buy here, you can set the stop very close, because if you break down, chances are that it will go down further. And your target might be the next resistance level in this case, which if we break above it will become a support level. And you can use this to your advantage if you want to scalp. If you see here, we went from 26 to 35, which is a bit less than 10 points. Still, if you buy a couple of contracts here, sell them right up here, that makes you a nice profit. As you can see, I don't have too many indicators on my screen. I do have some SMAs lined up in case I want to have a look. You see I have the RSI and the stochastics. Now I don't really use them all that much. What I do tend to use them for is for two things, basically to confirm my trades I want to take. Let's say, for example, in this case, we come down to this level, stochastics are low, RSI is low. That's basically a good confirmation that indeed this might be the bottom. So it's a relatively low risk entry that I can do here. and go all the way up. Similarly here, you see we are not quite above 80 and neither are we here, but still we're on the higher side of the RSI and the stochastic, so it's indeed a good confirmation that either I sell here or I even flip my long position to a short one and take the ride down again. Now, as you can see, we did the test here, and now we're basically consolidating a bit. So don't expect price to keep bouncing forever, of course. At some point you will break, and let's say price moves up again. We try to short here. It could very well be that this time it breaks up. So important to keep your stops tight, which gives you a very small loss, but on the other hand, the successful trades will give you quite some points. So that's a good practice. Another way I like, or that I used these two indicators for, is to basically spot divergences. They don't always work, but again, it's a way to confirm the trade you would like to make. Here as well, for example, on the oil contract. Oops. You can see we made a lower low here, but on the RSI we did make a bit of a higher low, which is another clue in the puzzle that indeed, okay, I hit my support level, I even see a divergence. That's for me a good signal to, in this case, go long. And you can see the results of this search. So I hope this helped you out. If you're interested to see more, I do daily reviews currently in a text form on chartspots.com. I will quickly show you the website. So if you go to what I typically do is I create price levels and targets for the S&P 500 and gold currently. If you would like to see more, do let me know. If I get a lot of requests, I might start adding additional indices or specific futures. So what I do in these is I create a chart and give you some price levels to watch out for. Also describing a bit the price action we did have, and also the catalysts to watch out for. So if you're watching this in the 7th of June, be careful of tomorrow, because there are some quite interesting potential market moving events happening. You have the Comey testimony, the UK election, the ECB speech by Mr. Draghi. All of those can have a significant effect, or might not have, on both the gold and the US and European indices. So again, thanks a lot. If you liked the video, please like it, share it, and subscribe to the channel. Thanks, see you.